Getting your goods and services tax reporting right is absolutely essential for any Australian business. So today, we're going to break down the two methods the Australian Taxation Office, or ATO, has approved for lodging your activity statement. We'll take a look at how each of them works so you can figure out which one might be the right fit for you.
We've broken this down into 5 parts. First, we'll give you an overview of the 2 reporting methods. Then, we'll do a deep dive into both the accounts method and the calculation worksheet method. And we'll wrap it all up with the record-keeping rules that, trust me, you'll definitely want to know.
Okay, let's get right into it. To start, you need to understand the fundamental choice every business has to make. There are 2 distinct ATO-approved ways to report your GST, and you've got to pick one.
So the source document lays out 2 main options for you. First up is the accounts method. This is where you calculate your GST straight from your own business records. Now, this can be way easier and faster if your accounting system, your cash book or software, is already set up to separate GST from your transactions. The other option is the calculation worksheet method, which uses a special ATO form that literally walks you through all the calculations step by step. All right, let's dig into the accounts method. It's a great, straightforward approach, but, and this is a big but, it completely depends on how good your business records are. So there are a few things you absolutely must have in place. According to the source, if you want to use the accounts method, your system needs to do 3 key things. First, it has to be able to easily pull out the GST amount for any transaction. Second, it needs to separately track any purchases you make for private use or things you buy to make input-taxed sales. Think financial services, where you don't charge GST so you can't claim credits. And finally, your records have to clearly flag any sales that are GST-free or input-taxed. Okay, so let's say your records are top-notch and you're ready to go with the accounts method. Let's walk through exactly how you fill out the key labels on the activity statement. First up, at label G1, total sales, you need to report the total of all your sales. That includes everything GST-free, input-taxed, and standard taxable sales. But here's the crucial part, and it's a unique feature of the accounts method. You have to put an X in the box to show whether that total sales figure you've written down already includes GST or not. Next, you've got labels G2 for export sales and G3 for other GST-free sales. This is where you list out those specific sales. But the main thing to remember here, and the source is really clear about this, is that these amounts aren't separate. They also have to be included in that total sales figure you just put down at G1. All right, that's sales covered. Now let's talk about reporting your expenses, starting with your purchases. Label G10 is for capital purchases. The source is pretty clear on what these are. We're talking about the big ticket items, the major assets like machinery, computers, cars, and even property like land and buildings. Then you have label G11, non-capital purchases, and this one is pretty much for everything else. This is where you report all your regular day-to-day business expenses. The examples from the source include things like your trading stock, stationery, any repairs you've done, and equipment rentals. Now here's a really great little tip from the source material, especially for smaller businesses. If your GST turnover is under $1 million, any capital items that cost you $1,000 or less can actually be recorded right here at G11 as non-capital purchases. It's a handy shortcut that can make your bookkeeping just that little bit easier. Okay, now we get to the summary section. This is where it all comes together. At label 1A, you report the total GST you collected on all your sales. And at 1B, you report the total GST credits you're eligible to claim back on your purchases. The difference between those 2 numbers is your final GST position. It's either what you owe the ATO or what they owe you. So let's tackle a question that trips a lot of people up. What happens when you buy something that's for both business and private use? It's really important to get this right because you don't want to be claiming credits you're not entitled to. The source material gives us this brilliant case study called TIPOD that shows this perfectly. Say you have a fuel receipt where 50% of the travel was for personal reasons, or a newsagent bill that has your personal magazines on it. In both cases, you can only claim GST credits on the part that's directly related to your business. So the correct way to record this is actually pretty straightforward. You record the business part under the normal purchase category, like non-capital, and you only claim the GST credits on that amount. The private part gets recorded under drawings, and you can't claim any GST on it at all. It's that clear-cut. Okay, on to our second option, the calculation worksheet method.
This is a much more guided, step-by-step way of doing things, and it's really useful for businesses whose records don't automatically separate the GST on every transaction.
The heart of this method is the ATO's official GST calculation worksheet, Form NAT 4203. Basically, its whole purpose is to act as a guide. It takes you through a whole series of calculations to make sure you land on the right numbers for your final GST figures at labels 1A and 1B.
Now pay close attention because this is a huge, non-negotiable rule for this method, and the source really emphasizes it. Unlike the accounts method where you had a choice, when you use the calculation worksheet, every single amount you report on your activity statement must be GST inclusive, no exceptions.
You might be wondering why there are so many extra steps here. Well, this method is more detailed for a very good reason. It's designed to stop you from making mistakes. After you fill in your main sales and purchase labels, you have to work through another 6 labels just for sales and another 9 labels for purchases. These extra steps force you to correctly account for things like adjustments and GST-free items, so you calculate those final 1A and 1B figures accurately.
And finally, let's wrap up with the one rule that applies to everyone, no matter which method you use: your record-keeping requirements. And let's be clear, this isn't just good business practice, it's the law.
The source document couldn't be clearer on this. I'll quote it directly. You should keep a copy of your activity statement and the records used to prepare it for 5 years after they are prepared, obtained, or the transactions completed. Think of these records as your proof, your evidence, just in case the ATO comes knocking. It's not optional. On top of that, the records have to be in writing and in English. If you're keeping digital records, which most of us are, they need to be in a format that's easy to access and can be converted into readable English without any trouble. So, what's the big takeaway from all this? It's actually pretty simple. Whether you choose the flexibility of the accounts method or the structured safety net of the worksheet method, getting your GST reporting right all comes down to one thing: keeping meticulous, accessible, and complete business records.